Hi, greetings of the day. This is Professor Ramakrishna. I am Professor of Finance at one of the leading business schools in India. Using my YouTube channel Archiversity and my website archiversity.com, I share my knowledge in various subjects of finance with the students, practitioners, and the small business owners across the world. In financial accounting, the final step is to prepare final accounts or financial statements. So in this lecture, I'll introduce you to preparation of a basic balance sheet. Just I would like to remind you that in my previous lectures, I explained how to prepare a trading account, then profit and loss account, then trading and profit and loss account. Now this is the beginning of a balance sheet, and in the next 4 sessions, I'm going to explain how to prepare final accounts. Of that, 2 will be final accounts without adjustments, and 2 will be final accounts or financial statements with adjustments. Do not miss the remaining 4 video lectures. So by watching those 4 video lectures along with this makes you a competent person in preparation of final accounts or financial statements. Balance sheet, which is also known as statement of position, which is prepared as on a particular date. In the sense, suppose if a financial year is ending on 31st Jan, then it is prepared on 31st Jan so and so year. So balance sheet is prepared on a particular date, and balance sheet presents you what the assets that the business own and what are the liabilities that the business owe, and the equity portion or what we call as a net worth, that net worth that the company or business owns on a particular date. Now there are different formats of preparation of a balance sheet. One is in a horizontal format, where we have liabilities on one side and assets are presented on another side. This is one format. And you have a vertical where assets are shown in the beginning, then liabilities, owner's equity, and liabilities are shown on the other format. So whatever the format that the balance sheet is prepared, the core idea of a preparation of a balance sheet is the same. That is, assets and assets what the company own, liabilities what the company own, and what is the net worth of the company or a business as on that particular date is depicted in a balance sheet. So we look at the example here. So from the following balances extracted from the books of Mr. Mukesh on March 31st, 2020, prepare the balance sheet as on, you can see here, you have to prepare a balance sheet as on 31st March 2020. So first thing that we do is we'll try to identify each account or item and in which account it belongs to. Let us take example building. Building is the asset that the business own. So capital is the equity that belongs to the net worth or owners. And cash at bank is an asset that the business own. Cash in hand is again an asset. Creditors is the individuals or businesses for which Mr. Mukesh has to make a payment. So this is a liability, because creditors to whom what we owe. Debtors is from whom we have to receive the money we own. So this is an asset. Furniture is an asset that we own. Inventory is a stock at the end that also we own. So it's an asset. Loan is the amount which we borrowed. So this is a liability which we have to pay. Then a patents is an asset that we have. Plant is an asset that we have. Reserves is the amount which belongs to the owners. So this is shown in liability side or as a part of a equity and net worth. So once we have this, then we'll prepare our balance sheet. So here is a simple format I'm writing for a balance sheet. On the liability side, this is one side and asset is the another side, and here we will write balance sheet of Mr. Mukesh as on March 31st 2020. So in the liabilities, first we write the equity. So the capital amount that the owner has is 1,50,000. So capital 1,50,000 we'll write in inner column, because we have a reserves also. For this, add reserves, or simply you can put a reserve separate also. So 50,000. So this total comes to 2 lakhs. Then we look at what other items that we have in a liability. So creditors is on a liability. So we'll write creditors and the amount is 50,000. So as ever we record them, we simply take capital, creditors and reserves. Then what is another liability? We have a loan. So loan is another liability and amount is 1,50,000. So loan is also posted here. On the other side, we'll note the assets. So first we have is building. This is worth rupees 1 lakh. Now check the building. Then cash at bank 40,000. Cash at bank 40,000. Then cash in hand. Cash in hand 20,000. Then debtors 90,000. Then furniture 10,000. Then inventory 10,000. Then patents 50,000. Then plant is 80,000. So here, while preparing this balance sheet, I am not following any format or a classified. Normally when we have to prepare, whether we put non-current assets first, then current assets second, then owner's equity, then non-current liabilities and current liabilities. In other way, we put it in a more liquid format, that is current assets at the first, then current liabilities likewise. But anyway, as I explained you, the core idea is all the liabilities on one side and all assets on another side. Now we balance these two. So this is 2 plus 3, 4 lakhs as the liabilities that we have. So according to our accounting equation, what we say is our assets should be equals to liabilities plus equity. Assets equals to liabilities plus owner's equity. So our liabilities plus owner's equity is 4 lakhs. That means our assets should also be 4 lakhs. So we'll total these values using a calculator here. So this is 1 lakh plus 40,000 plus 20,000 plus 90,000 plus 10,000 plus another 10,000 plus 50,000 plus 80,000. So this is again 4 lakhs. So our assets equals to owners plus liability. When your assets equals to liabilities, it clearly indicates that you have posted all your transactions in a significant manner in your books of records. So this is a basic balance sheet which I have shown you. So in my next lectures, I am going to explain you how to prepare a final accounts, that means financial statement, starting from trading account, then profit and loss account, followed by the balance sheet without adjustments. So 2 lectures is devoted on calculating the final accounts or financial statements without adjustments, and another 2 lectures are devoted for calculating or preparation of a final accounts or financial statements with adjustments. With that, we will conclude this course on a financial accounting. Thank you. See you soon.